below. So as you can see, you have the first touch, then it's confirmed as resistance, then price blasts through it and confirms it as support. So you have one horizontal level. And then higher we have 31K, which was the first, resting point after this huge rally to the upside. Visited and marked the bottom in July. That's also a new horizontal level for us. We use the horizontal ray tool right here. And we can also see some obvious resistance back up here, around 57, 59Ks. So I would use this one right here. Yeah. It's mainly for reference. I don't execute on these lines just per se. So I just happen to, to locate what are the most interest levels in any of these time frames. It also mark this one out, 48K. Let's see, it has a touch right here. It didn't offer much resistance. Yeah, I'm gonna disregard that one. But here you have at this little peak, 46,800. You do see some kind of reaction after price flips it forward. Then, small rally back, and it goes back down. Okay, so this one right here seems to be an important level, disregarded on the way up, disregarded on the way back, but then it did face some resistance for price, and that is 39K. So now you switch to your candles and you can see how these ones actually correlate to your analysis. As I was saying, you could have inferred that price revisited the horizontal level with a wick or anything of that kind, then flipped it, reclaimed it, support, and we left. And same for the lines up higher. You can see here resistance, resistance, price wasn't able to close above the line, then flipped it, okay, deviation right here, and we went back down. And now we're facing, are struggling with this 39K zone, which I think it's going to get revisited anytime soon. As you can see, we have some major time frame equal lows right here around this level, which is 39,600. Those are the ones I'm looking to get long into after a sweep. So that's for now. Okay, let me put out what I'm doing. So first, horizontal levels. That will be the first thing I do on the line chart. Second, I determine a structure. So how do I do that? It's basically by following what price has been doing so far, from this time to April. Crash, higher low, higher low, high, higher high. This could be considered a low, but not for me. This one would be a proper low. Swing low, higher high. This one could be considered a low. Broke structure to the downside. We formed a supply order block, which was then disregarded. So you could start marking those out. Let's see. Mm, You have it. Price tagged it. Uh, it led you to the flip of 39K as support. So based on a weekly time frame, you could have gotten into a trade. That's why here playing it. It was also an FVG gap fill. You also got it. So okay. Then we start looking at the recent structure, which is this was a high, this was a higher high, and now I could say we are cautiously bullish on the weekly, since I believe this is the structural low. Losing this low would mean to me that, the structure has once again flipped bearish. But I mean, we are at like percent away from the top. I really don't know. Lower it a bit. Voice settings right here.
Yeah, from there you can handle it.
Okay, just one sec. What should I fix? The input volume, the output volume.
You should decrease a bit input volume.
Okay, how does it sound now? Better?
For me it's better because I already set it, there is no issue. Follies?
Okay, Follies, what about you? Mhm. let's see. Okay, Follis is typing. Okay, Follis audio is gone. So, I mean, can anyone give us more feedback regarding the audio? Can you guys listen to me nice, properly?
I think it's good. Yeah, there is no issue.
Okay, sure, let's go for it. So, once we already did all of these three, I'm gonna mark this one out as supply, as I was telling you, since we did get a nice impulse from it. Supply. So once I have all of these, I just start looking into positions and trades. As you can see, this is a weekly time frame, so I would be looking for plays in the 3-day time frame. And what I would like to see is my order blocks aligned within the zones that we just marked out in the weekly time frame. So go to the 3-day time frame, and it becomes a bit more clear what price is trying to do. You can also have microstructures within the structures as well, and it applies to all time frames. In this case, you can mark this structural low from the 3-day as the one that broke structure. Thirdly, let's put it out because it's the one that I'm seeing. Okay, so losing this low tells me that we're now on a okay. Folks told me that the idea is good. Losing this low tells me that we're now on a bearish order flow, so we should be looking for shorts on higher time frames instead of longs, and it has been the case so far. Price has also been suppressed by a heavy trend line. Let's see. You can add these for confluence as well. Yeah, you can see that. Use this on dotted lines, black, so it doesn't cloud my charts as well. Okay, so now we start looking for plays. Where do I think the structure comes bullish once again? Well, 52K seems like the most obvious play. It's like the most obvious place to, regain the bullish structure. So we'll keep it at that way in the 3-day chart. But as in here, you can see some supply based on the same premise that we marked out the weekly. It did give us a new lower low, so we marked this one out. But it isn't a proper swing, so I do think that bullish structure is fully reclaimed after 52K. That will lead us to a revisit of this order block. Not new all-time highs for now, but at least some upside. Revisit those upper levels, and yeah, this would be supply the 3-day. And as you can see, I'm only marking out the order blocks that are aligned within the horizontal levels that I'm taking. For example, let's say that we find an order block out of nowhere sitting here. For example, this demand right here. This is a valid demand order block. I wouldn't have taken this. Why? Because it isn't sitting at a place that has been proven as support or resistance, and the market doesn't have any interest in trading at these levels. You can see it from the past, and you can infer it in the future. So what would happen if you have had taken this as a demand order block? Well, most likely you would have bid it, have been filled here, strong candle. You wouldn't have been stopped out just yet, but price didn't give you any reactions at all, and then it just sold off. So adding this confluence into the location of your order blocks is pretty key in order to maximize the probability and enhance the probability of your setups. So that's why I think horizontal levels are one of the most important tools that you need to have in your charts. And yeah, not just throwing blind rectangles out of nowhere. You need to add context to it and where price is sitting and where it's going to be located, and also using the concept of FBGs and gaps. That's also very useful. And in this case, that's what I am looking to be shorting these levels. You also have an FBG coming from here, 62,183, and price should feel it after reclaiming this as support. So from here, visit those levels. And well, as you can see in this case, this was a supply order block. Price filled the gap. There you go. This is an FBG and sold off from there. It gave you a very nice 25% reaction. So if you were looking for shorts around that level, or maybe, you know, after catching the bottom down here, that would have been one of your targets as well as these highs, these ones right here, all of these weeks. All of those tend to be revisited and work as, you know, price magnets for the future. Okay, so we already have that, and we already have the weekly and the 3-day chart done on BTC. So now I'm gonna share what views from. I mean, this is very discretionary. I really don't know what's gonna happen, so I'm not guessing, but I'm just interpreting what the chart's trying to tell me. From this point of view, you know, we have the equal lows right here. Please, I mean, put some heavy importance on these ones. These tends to act as a price magnet. Okay, let me fix this. Okay, equal lows. Right. 1, 2. That's a perfect equal lows right there. And you had a strong 3-day demand in here. It has been acting, sitting at support, confluent and aligned with the 39K flip. But I think that this demand is no longer that important because it has been tested twice. So 3 times if we look at it from here. I mostly think that we should be looking for deviations back into 39K and then longing, targeting up. Okay, so let's see. And simply put, with an arrow, I think we run these lows, break out of the trend line, reclaim 39K as support, and then a revisit to 46K. Or we could, you know, break out of the trend line from here, then revisit the equal lows, and might as well then go to the weekly supply, which is pretty valid. You just have to be aware of where the important levels are and how you position yourself. So you cannot be talking in absolutes in trading. No one really knows what's going to happen. So just be anticipating the plays and, you know, expecting different scenarios. That's what's going to give you the edge as a trader in these markets. So this is the 3-day chart and the weekly. Does anyone have any questions on this chart? Any questions regarding how I'm planning or my views on it? If you guys have any, please, you know, shoot them up and we'll get them answered whenever you want. I think that after this chart, I'm going to jump into the daily one, but it's going to be pretty similar. So I mean, it will be most of the same. But from a high time frame perspective, I think it's pretty valid to look at the 3-day and the weekly to gain, you know, like let's see, a more valid forecast into what's going to happen within the upcoming weeks and months. So if anyone has any questions, I don't know if I should see those in the chat or here. I don't know. See live backtest chat. Okay, there it is. Okay. Let's see. If anyone has any questions, just I mean, it would help me a lot if you guys put them out in English because I would have to translate your questions from Turkish to English. But I mean, I could still answer. But if you know. Follis, you here? Yeah, Follis is here. Okay. What do you think about it? I mean, should we jump into the daily chart? What do you think so far? Everything's cool. Okay. Okay, do you support your bias with some macroeconomic things like Fed tightening or 10-year bonds or something? I mean, you should be totally aware of what the Fed perspective is and how the global macroeconomics are shaping into 2022 or whatever, you know, time frame we're expecting. For example, for quarter one, we're expecting some rate hikes this year. and that should as well mean risk off for these kind of assets. But from a technical perspective, I I don't say that I would disregard those facts, but you should be more than fine with just analyzing what price is telling you, because at the end of the day, all of that information is priced in, is already discounted, and based on that thesis, all of this already contains all of that info. So if you stay aligned with what price is trying to tell you, you should be able to block away the noise and information, just, not to add many layers of complexity into your analysis. So keeping it as more simple as possible. I really think simplicity is key, and less is more. That's why I would say that, but it's always important to be aware of what's happening. Always. Okay, is it logical to wait for a price up since the price didn't sweep the liquidity below 39,150s? mm, is it logical to wait for a price up? I mean, as I was saying, nobody can talk to you about the market in absolutes. The most logical approach to me would be building some kind of a bull trap around these levels. Let's say this was low time frames, but let's take a look at it. I have to revisit my other chart. Just one sec. Let's see. Okay, I would say it's pretty valid to build a bull trap around these levels, maybe a deviation, and then revisiting the high time frame equal lows, which are the ones we have here. But price might as well just go higher to take this liquidity and to take the stops all over to 61K. I cannot really tell you what's going to happen. I'm just placing myself, accordingly to the order flow and what structure is telling me. I cannot disregard 46K as resistance until proven otherwise. So my system and my strategy tells me to short it, so I'm going to be shorting it. And once again, I'm going to be targeting the equal lows. And if those equal lows don't get swept, then once again, I look for opportunities higher, and I'm going to target these once again. But I do think that a very high upside target is possible once we sweep this liquidity right here, because these aren't equal lows on a low time frame. These are equal lows on a weekly time frame, and many positional stops are below. What's the low of this? 39,500. So once you take these lows, those are going to be triggering the stop market sell. So we might as well go very deep. We could deep all the way to 37,500s, and who knows, maybe fill this gap at 34K. But I don't know if it's going to trigger a liquidation cascade. I'm just going to play the sweep of the lows and then aiming higher from that perspective as well. So yeah, it's logical to expect any scenario, if that answers your question. Okay. See, any other question? Thanks to you, no problem. You're very welcome. Okay. So I see nobody typing in the chat, so I guess that does it for now. Now let's jump. Okay, Mali is typing. Let's see what Mali has to say. I'm gonna be charting the daily while you guys type your questions in the chat. Okay, it's very good. Thanks. You're welcome. Okay, so the same steps as the other one. I'm not gonna be charting this one completely, but just gonna be charting where price is sitting right now and the most immediate points of interest. Keeping it level to level. But we did previously, we look for the horizontal levels that have more confluence, and as you can see, 1 touch, 2 touches, 3 touches, 4 touches, and price is near that zone. So we put 1 right here. And then the most immediate resistance to the upside should be 45K. Yeah, looks like it. 1 touch, and support broke down. We also have it from here, but this one's it's lower. We have it from this spike right here. Okay, this one. As you can see, the horizontal levels differ one from the other, whether you're looking for them on different time frames. So it really depends on what you're trading and what your style is. It's not gonna be the same for a high time frame positional trader, for a intraday trader, but you get that point. It's pretty basic. So what are we doing right now? This is the most immediate resistance and this is the most immediate support. It's a 6K range. So let's see what the candles tell us. Okay, now we determine the structure. As you can see, one was making this one was a higher high. This was the low, then lower lows, lower high, equal lows, broke out of this lower high. And that tells us it's a break of structure. Okay, so we have daily market structure break from this level. This gave you a demand order block, which is pretty confluent with the support level we're marking out. As you can see, I always look for order blocks that are sitting next to my horizontal levels. That's why you see purple lines in my charts. Those are not there just for, for little preferences or just to decor. They have a purpose. Now, okay, why didn't I take this one as a demand order block, which was more than valid? And of course, it could have been executed on, or it makes total sense because it's close to 46K and it preceded this higher high. Nice impulse. It gave you like 6 times the order of magnitude from the down candle. But I think that price was going to be more attracted to all of the air that is below that candle. As you can see, this one was a barred pattern. We sold off aggressively to the back to because they're always a favorite color. Okay. So we basically sold off aggressively into 40Ks and then we took off aggressively from 40Ks. And I was thinking, you know what? If price was to come into this level, then it would have been filling all of this space right here. That's why I make some huge emphasis on fair value gaps and how price is attracted to them, because they allow you to beat the proper places and to add more confluence to your setups. So there you go. Gap was filled. Damn, that was an ugly wick. Of course it was, and price bounced from it. Of course, in hindsight, everything is obvious. I'm not gonna tell you that I caught the perfect bottom, because I didn't. So what you have to do is just train your eye for these future occasions. So price was making higher highs, higher lows, higher lows, higher highs. So this is the one that preceded that last high. Therefore, it becomes the structural low. You got another market structure break at those levels. Okay, let's see. There you go. So what happens? This becomes a supply order block as well, which is aligned with the high time frame resistance we drew in the weekly chart, as you can remember. And from that moment on, price hasn't been given many opportunities, if you could say that. Price did form demand order block before that rally, but what happened? Price completely disregarded it, and then it became a breaker. So you have to be able to switch bias really quickly. And as you can see, this one was the last down candle that preceded the new higher high. It held a bit, and then price took it. Price took it for, I mean, it didn't even matter, just lasted off for it. It takes more sense, it gains more sense in the 12-hour. Yeah, because in the 12-hour, it wasn't tested. Therefore, it makes much more of a, it makes it a more attractive breaker. You don't like to see this kind of price action to execute on a breaker. You don't like to see touches and the supply order block offering resistance before price blasting through. You like to see price completely disregarding it at first and then price coming back at it, because that would mean that price is feeling some inefficiencies coming back into the breaker. Therefore, you want to beat it. You want to execute on it. This doesn't mean, the second scenario doesn't mean that the breaker is not actionable per se, but you're looking into something more like this one right here in the 12-hour, in the 12-hour time frame. Price didn't test it, and when it came back, and when it came down to test it, it completely, it was an aggressive breakthrough on the breaker. So back again, daily. Okay. What else can we take a look at it from this time frame? Aggressive sell-off from this candle. That would be, I don't know, maybe 8 times the magnitude here. And type that one out. You can mark it out as supply as well. There you go. Breakers and gray for supply and demand. That's like my main thesis. Okay, now we start looking what's been happening lately. This is also a valid supply order block. This one you have right here. It's sitting above 46K. And why is it valid? Because it is super close to the high interest level, which is 46K. So it makes a lot of sense for people to sell around these levels because it was previous support turned into resistance, and now we're looking to sell it. So, okay. Now let's take a look at what could happen from here. We have the same equal lows we highlighted from higher time frames. So you must be aware that those are price magnets and they haven't been swept. Now, as we were saying before, if price goes through this level, I'm not gonna say, oh, it's lights out. No, that's cliche and many people have said it. It's still gonna be a sweep into demand, so you shouldn't disregard it. One tap, second tap of demand, you are most likely expecting for price to, make an SFP on both of these swing lows before putting yourself on the long side, aiming for higher targets. So that would be a logical scenario. And if that one doesn't happen, then would expect lower prices such as 36K. Yeah, seems like the most obvious logical support from let's see, from here, what do we have? We have a close here, then price flipped it. This is 36K. And on the daily time frame, okay, it's the order block that you drew last valid. Because it is invalidated. Why is it this one right here? You say it's invalidated because of these weeks going lower. Second candle, yeah, okay. Something I learned, I know that I specify that in my guide, but something I learned from executing and back testing these concepts is that most of the time price deepen or going lower in the next following candles doesn't automatically invalidate the order block, but what should give you the most confluence to bid it or to ask for shorts within the rectangle would be its location. For in example, in this case, we have 40K as a resistance, then price precedes the rally right from that level. So that would mean much to me rather than the fact that price invalidated the order block by going lower. So I mean, this is the same example as the one I explained in my document. I would go to lower time frames, and as you can see, the one here in the 12-hour, it happens the same thing. It's it's a wide body candle. The downside, price goes deeper in the next one and then blasts through. Let's go to the 8-hour. Let's see what we get. Okay, on the 8-hour, you have the right demand. This would be the most attractive order block if we're looking to play it from the book. But what would happen if you're looking, to get very much specific on what you're looking for? Price wouldn't have it. I mean, you would have been front run here. So price is also leaving this gap, which is the one that I have highlighted in my daily chart, the one I posted in Twitter. This is the 8-hour FEG that I'm looking also for price to fill coming into these levels. And I think it's gonna offer a really solid reaction from these levels. Okay. So yeah, I mean, pretty much what Follis is saying, it depends on the it depends on context and how the order block is located, and many other factors. But that one is a nice point if you are looking for very attractive order blocks and which one would be a valid point. But it pretty much helps when you have several order blocks that are overlapping each other. If you have, I don't know, let's say 3 order blocks within the 12-hour, 8-hour, and 4-hour time frame, you look for the most attractive one. And what would help you? That kind of information. If price went deeper in the following candle, that would mean that this one isn't as valid as the other one. But I learned from experience that you shouldn't disregard them just as they are. I should come with, I don't know, a second thread or maybe a second document on more detailed execution tips, and maybe fixing or developing more from the first guy. So yeah, let's go. Let's analyze the daily chart. Where do I think bullish structure is recovered? Above the swing high, above 48K. About 48K, bullish structure is recovered above here. Where do I think we're going to 100Ks and those crazy targets that people talk about in Twitter and get them thousands of likes for engagement? About 59K. If we get above 59K, then I would consider revisiting 85, maybe 120s. That's my maximum target, if I'm honest, in this bull market. I wouldn't consider anything above that. I mean, I pretty think it's bullshit saying that BTC will go to 220 bucks, 220,000 within this cycle, which it doesn't make any sense to me. But where do I get the 120,000 target? From the micro fib extension, from the swing low to the swing high. We can go for it as well in the weekly. Let's see. This is something that you don't actually get to see so often, me using tips, but I'm gonna do it here. Okay, let's get it. The negative one or the positive one, I don't even remember which one was the one that gave you the target. There you go. There you go. Where are you? Okay. 1.618. Where is it? I don't actually get to see it. Okay, here's the negative one, but I want the positive one that gives me the target. Okay, so this must not be in a logarithmical scale, because according to this, it's going to 1 million bucks. So let me fix that. Sec. Logarithmic, regular, let's say. Where is it going? Where is it going? Okay. Well, in the regular scale, it's going to 157Ks. That is a macro extension. So that would be like the craziest of them all. The craziest target of them all. I mean, most of those guys have valid thesis, you could say, for BTC reaching those prices based on the stock to flow, all of that, on-chain analysis stuff. But from a technical perspective, I really think that BTC could top out around 100K. And ways in this. Let me know if you guys have any questions. From here, we should jump into the S&P to gain like a wider perspective on equities and where the stock market is heading, because there is some strong correlation. We should be paying attention to the macros at these levels, mostly because the cycle is close to its end, and optimism, not only in the crypto market but also in equities, is reaching historical highs. And as I have said before, you should always be looking to fade the crowd at the extremes. Right now, many people is feeling bearish on BTC, so that's how you should be looking for places to get long. Not for the long term, but for example, you could position yourself for the midterm, maybe until Q2 or until the rate hikes start. So yeah, I really do think that we can see some nice bounce before that one starts. And if you're looking into gain a better perspective on how macroeconomics and all of those factors influence the market, you should be really paying attention about what Shimsu has to say. I know he's been a bulltard all of these days, but he really has a valid argument, unlike many other traders in Twitter that only do it for engagement. So if you are into that kind of info, make sure you jump into one of his spaces in any of these days. He always holds like 2 per day. So you just request to speak and he will for sure grant you the word. So let's see. Does anyone have any questions regarding this time frame, regarding my perspective, or what should we expect? I mean, as of now, what we're doing so far is just showing you how I approach charts and how I produce them. So yeah, that's for now. But then we're gonna jump into how we look for execution strategies and plan on our setups and how we look to execute on a weekly, on a daily, or whatever time frame that we're looking to trade. And that's when the fun will begin. We're going to do some little back testing. And I'm actually going to be doing for the first time, since I'm going to be practicing on some new entry techniques. So it's not that I'm going to show you a perfect session, 100-hour trades. No, that's not going to happen. So bear with me. Okay, well, I want to ask you about the 1-day market structure break. I guess I will look for the lower wick. Can you explain it to me? Thanks. By the way, I got your breaker block. Okay, nice confluence, man. Let's see. The 1-day market structure break. Which one? This one right here? The one at 59K? Is that the one? Or okay. Why do I consider that one to be a market structure break? Okay. Uh, if you're looking at market structure, what will give you the swing high or the swing low to break, and what determines the structure is the one that preceded. In case of a bullish structure, the latest highest high or the higher high, if you want to say it that way. So let's say we're in an uptrend. This high gave me a lower high, therefore it doesn't become my structural low, but then this low gives me a higher high. Which one becomes my protected low? This one right here. So losing this low would mean that we have now shifted structure, or at least we are presenting signs of weakness, and therefore we must be looking, to be cautious or whatever you want to position yourself. But in this case, losing this low would mean the structure has now flipped bearish. We are now looking for shorts instead of longs. And what's the basic premise under this? You're not gonna ace the 100% of the trades you take. Well, the purpose behind finding the structure and trading in favor of the trend is that you get to long every and each one of the dips until the structure shifts. So let's say that we are in a very clear uptrend. Price has been going up all this time. If you are if you are acting accordingly to the structure that you're trading, you will have 1, 2, 3, 4 opportunities to position yourself in favor of the trend. And what will happen after is that at one point, this low is gonna give in and the structure is gonna shift. What will happen there is that you are going to lose one trade, and this is going to become a breaker. So you should be really quick to adapt and to shift bias into the downside. And that's the basic premise. But that's why you have to catch structures and trends early, just to gain them. just to get the most profits out of it. And in this case for BTC, in the higher low, it was lost, it became a breaker in the 12-hour because it was a demand order block, as you can see. This is the last down candle that preceded this the latest highest high, and then price sold off from there. Something that can be tricky and that I used to execute on breakers is to have the SVGs in, I have them marked out just for compliance. I really don't like to use tight stops on breakers. So in this case, I would have asked for something like this. Yeah, if I'm honest, something like this. Putting my stop above the FBG, and in that case, you can use it more tight in regards to it, and then expect price to sell off, because you don't want to be caught in a bad trade if you are shorting a breaker. If price goes higher, you just prefer to take a second short position by positioning yourself. I don't know, maybe here, this supply, putting your stop above this high, and then you target the swing lows. So that would be like a higher probability play. So if you are playing breakers, just make sure that you are aware of what's happening above. And in this case, we had a fair value gap. It hasn't been filled yet, so just take that in mind. Okay, so after the market structure shift happened, then we would expect the previous lows for taking profits, right? Of course. What would have been your targets in case you would have shorted right here? Say this one, obvious low. I don't have this one. Okay, this is an obvious long, so an obvious swing low. So this is the target. What other? This one right here, a notorious wick, swept as well. This one right here. I sincerely wouldn't have targeted this low, my short from these levels, but it happened, and that was it. In this case, I would have lowered my stops, which is what I usually do when I'm swing trading. If price gave me a lower low, I just put my stops back to break even. Price gave me a new lower low, I put my stops above the swing high that gave me that lower low. If price did that again, I just moved my stops here, and then price back again, put my stops up here. So that's what happened to me with the recent atom play. I don't like to cut my trades early because I've been left out many times, but in that case, I just prefer to secure profits instead of exiting early. But yeah, I mean, it can be counterproductive as well. But profits are profits. In case you're looking, so insecure, or you're double thinking about it, just exit the trade and that's it. Take a quick break from the charts, and you'll be more than fine. Okay. So first of all, thank you all for this organization. It's so valuable. You're welcome. It's our pleasure. My question is about liquidity. Can you explain that, please? Which liquidity bills do you want to be taking? What? Let me run this. I don't get the full question. Let me look at it from my phone. Okay. Just one sec. Okay, can you explain that, please? Which liquidity bills do you wait for taking by well in a bearish market? Okay, if you're in a bearish market, you're aiming to get the buyer's stops, and those are obvious wicks and obvious places of liquidity. You shouldn't be looking to overcomplicate it that much, but for example, in this case, price sold off. It kind of held for the following day, and it put up these two equal lows. What that's going to tell you is that once these equal lows get run, all of these stops are going to be triggered, and most likely you're going to be passed this week, which happened. And the next target would be this one, pretty obvious, and then this one. And for all shorts and high time frame shorts, which I plan to do if we get to 46K, this one will be the most logical target, 39,600, since it's a pair of equal lows. And those are the ones that became your targets, the most obvious places. I mean, you don't have to overcomplicate it. If you're looking for longs in this case, then you should target this one right here. You could target this FBG right here. And if price goes higher, then you should be looking into this one and into this one. Yeah. Also, you could be looking at this one right here, but yeah, I mean, this one's aligns with a supply order block. So this one's aligns with a supply order block as well. So you want the liquidity that rests higher, not inside of the supply order block. Instead, instead of those being equal highs or equal lows, whatever the case is. Let me know if it's okay. I see your point now. Okay. Okay, he said if there are equal, it's just above an auto block. He just doesn't consider that auto block is strong and so exactly. It's very basic. That it's pretty much basic. Yeah, that's the basic premise. According to my backtest, in 1 minute microstructure breaks are not efficient much. They even decrease my win rate. Exactly. That's something really important, and that's something that I've been talking about with Follis, Rimbeck, and all of the guys in our groups. I don't like to trade lower time frames precisely because of that. I mean, the lower the time frame you go, you are facing much more algorithms and trading bots. So price action becomes more random. You are trading against machines, so your edge is going to be, you know, tougher to get or tougher to. It's going to be tougher for you to win in those lower time frames. Since you are basically trying to win against machines. So in this case, basic price action concepts don't actually give you an edge on those lower time frames, and that's why I don't really like to go that deep into my trading. The lowest that I've ever been into is it's a 5 minute, and I think it's very random. But I think that if you're going to be trading those time frames, it's more of a liquidity perspective instead of a price action one. You should be looking into weeks, stop hunts, runs, and yeah, double confirmations and stuff. That we're going to be talking about those in a few minutes. But I mean, yeah, that answers your question regarding lower time frame trading. I don't actually rely as much on these concepts precisely because of that. Exactly, it's what Foley says. It's the same thing. No, you're very welcome. Okay, so now we have YouTube. We don't have YouTube. I got distracted by the joke. My bad. Now we have the S&P 500. We're gonna chart that one. Let's get to it. Okay, so the one that BTC is the most related to is actually the Nasdaq, the QQQ. But we're gonna take a look at equities. They closed red today, so this is a warning sign. Let's see. Everything looks pretty much, you know, not concerning at all, but I really do think that the equities market is overextended. So I've been trying to get some ideas to position myself accordingly. Let's take a look at this. Okay, as you can see, this trend line has now broke to the downside. And from a market structure perspective, we could say this is a swing low. Yeah, I mean, same as in life, as for trading, you know, think of the worst and you will probably be right. So let's take this as a 1-day market structure break. Okay. Okay, what happens after that? This becomes supply. Becomes supply. And now, since this is looking like, you know, very edgy, I'm gonna start looking from the horizontal levels. Of course, this was one of them. This one right here. Price held it, closed below, closed above, kind of holding. It went. This one right here as well, same structure. 43.80. And now, okay, we got a trend line breakdown, which is pretty much concerning. But yeah, I mean, if you are looking at a chart that has this pattern, it has been like that since more than a year ago, then I mean, it's more than valid to look for exhaustion points and signs of concern. Um, in this case, I mean, what we would expect is this demand order block to hold this little candle right here. So it should be nice to see how the S&P reacts tomorrow. Be a green day. It should be. I mean, price action concepts on the equities are pretty effective. Okay, and here you also have another demand order block, very small one. It's very close to support. You can take it. Let me take this one right here. Okay. Okay. From this point of view, what we could be looking into from the S&P. Okay, let's see. I would expect this to hold 100%. Let me go to lower time frames, the 4-hour. Okay, look, the 4-hour is printing. It's printing. This is an evening start pattern. Let's take a look at it right here. Okay. Or it's a morning star. No, it's a morning star. It's a morning star pattern. Okay, there it is. This is where you look for confluence. If you know candlestick patterns and what they could anticipate, once you see a strong candle and then you see like a doji, this means that the move probably exhausted and you should be expecting a reversal soon. So that's what we're looking at in the S&P. As you can see, strong candle to the downside. Now we have some kind of an inverted hammer or an inverted dragonfly. I don't know. I really don't know the names of the candlesticks. So you should be expecting a bounce at least. Same as here, but this one go all the way. I mean, it did dip lower than this one, so it wasn't that strong of a pattern. Next day we got a really strong bounce. But in this case, yeah, I mean, you should be looking for reversals right here. And next area of interest should be around here. This one right here, 683. I don't know what to expect around these levels. I mean, for now, just keep it level to level with equities. But from the way the daily is shaping, I think that we're gonna get a bounce into 4700s, and after that, I really think it's decision time. It's really important to align equities and traditional markets with news and what is actually happening with macroeconomics and political factors, since these markets are very much affected by those news. In this case, I really don't know what happened today. I don't know, maybe some Omicron or some global warming stuff, something like that. But yeah, you have to be really aware of news and what's happening from a global perspective. You are looking to trade equities and all these kind of assets. So from here, I really like the fact that the S&P is visiting a demand zone while BTC is resting as well on high time frame support. So those are encouraging news for high time frame longs, the way they're positioning themselves. So yeah, that's some confluence right there. Any questions regarding this chart or any analysis that you guys want to share? For example, this low was taken. So, liquidity, now we should be looking for liquidity higher. We also have a fair value gap here, and futures are just starting to trade. So let's see. I see Joel is typing, so let's wait for his question. Okay. Okay, you saw my Luna setup, okay? Okay, if I can explain it for the followers. Sure, let me take a look into my chart right here. And my expectations. Okay. By the way, what is my Twitter? My Twitter is at MGV Capital. Let me put that one right there. Oh, I put it in high caps, my bad. I'm not screaming at all. Okay. So some nice reaction so far. Okay, what I was looking for Luna, actually, this is a 12-hour time frame. I was thinking it would go deeper, but it's actually sitting at demand the 4-hour time frame. So it was valid to put a long into it. Strong coin, 5% up in the day, hugely outperformed the market. Really nice, huh? Okay, so same premise as before. What happened is that we marked out our SR levels, our horizontal levels, and you start looking for the order blocks that are located the most close to them. So in this case, you have the supply order block, have an FBG close to the SR. I think it touched it. I think it did. Touched it, sold off. Okay, in that case. But now, uh, I was looking from this level, I was expecting price to revisit 85, $85. And maybe after here, tagging this resistance. I didn't put the other rectangle on this one because it was already been tagged by this high right here. And as you can see, I swept it into the supply order block. So you have to be aware of those things. I erased the rectangle since it was already been tagged and I had the reference from my horizontal line. So it was most of a nice aesthetics perspective. So price sold off from there. Now this was our swing low, price broke through it, and this is our form supply. So it would be logical to expect Luna to visit 85 bucks again and show some reaction at those levels. Maybe after 85, we get to revisit this order block right here, which is untested so far. Price has some inefficiencies to fill around here, I think so. Let's see. Nope. 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 Well, apparently there aren't any inefficiencies until $59. So yeah, I mean, it was a more than valid play, and you want to be in and out quickly in these kind of setups. Tight stop since you don't want to be using it this slow. But yeah, I mean, it was valid. Glad you took it. Okay. Any other questions? Mm, I have another question confusing my mind. Do you prefer breakers or auto blocks while you trade in retests? Okay. It depends on the context. If the breakout was pretty much aggressive and pretty violent, then I would be looking forward to hopping in a breaker play. But as we said before, we want that breaker to be violated the first time price visits that level. You don't want a breaker that offers, a slight resistance or that gives some kind of fight whenever price visits it. You just want price to go through it. That's it. Then come back, feel some inefficiencies on its way down, and then you get long on it. For example, let's use the dot chart for reference. Okay, you had a valid breaker around here. You certainly did. This was supply. It gave you the lowest low. But what happened after? I was actually looking to hop in the breaker here. But once I saw that price got all the way down and it took these highs and also filled these inefficiencies, price is going to be looking to fill those gaps on its way down. Therefore, I disregarded the breaker, which is this one. and I was looking for plays at the bottom part of the range, which is this. This is the range that I'm talking about. After the sell-off, uh, the range floor settles, then you have the range high. 1, 2, 3. You have 3 taps, deviate back again to the bottom part of the range. You deviate, and right now you are retesting the bottom part of the range. You got rejected by, I think this was, I mean, of course, it's an FBG. I think it was a 12-hour supply on the mid range, so it would have been a valid play as well. One of our buddies got it. And Josh did a great job taking this short. Yeah, I mean, this was a 12-hour supply. As you can see, 12-hour supply right above the range EQ. And price is now revisiting the lower part of the range. And you have an H12 demand sitting at the bottom of it. So it's really nice confluence for a long. And I really do think this one has the potential to revisit 29 bucks. I'm going to be paying attention around these levels, mostly 27 bucks and 26. But I don't think 25 should offer that much of a fight for the price to go up, since it's a clear range deviation. Okay, exactly. Follis says other blocks are better than breakers for him. This is personal experience. I mean, yeah, because breakers have to be really quickly to play them, and it depends a lot on how, on the way that price blasted through the previous supply or the previous demand. And what we just talked before with the BTC example, breakers tend to be really tight. So in order for me to use a breaker, I need to have a clear FBG below, or a clear stop below it. Otherwise, I wouldn't take it. For example, let's say I wanted to take this breaker setup. I would have entry here, but where would I have been wrong? I mean, below the demand order block. So in this case, I would have rather just to beat the demand order block, put my stop below it for more, and since it's sitting at the bottom of the range, I prefer to have a higher R and more probabilities, instead of trying to catch instead of trying to don't miss the wave aiming to those range highs. So you have to be patient and add context to your ideas. And in this case, that's why I didn't beat the breaker on dot. Okay, any questions about that? Okay, nice price action on that the last few days. Indeed, it has been clean. Price was also wedging to the FBG, showed some signs of weakness. And when you see all these wicks right here, that must be a sign of exhaustion as well. But now you have a nice set of equal highs, I think. No, it was swept. Yeah, it was swept. Nice. Target right here. Okay. So as a takeaway, while determining the breaker, we need to consider that the area is required to be passed strongly with a breakout candle 100%. You don't want the breaker to offer you resistance. You want to see this for a valid breaker for you to bid. You want to see violent candles going through it, and that's it. You don't want to see one touch, two touches, three touches, and then through. No, you want to see quickly. You want to see it violent, and that's it, aggressive. That makes a more reliable breaker. And adding confluence as well. I mean, I'm pretty much sure that around these levels there was some kind of lower time frame demand order block, something of that kind. But as you can see, this was acting as resistance, and then it was flipped as support. So this one you could have regarded it as a demand order block. I personally didn't, since we're on a range and I'm looking to play the extremes. I really don't like to play this kind of, for example, this kind of setups. I would prefer to short higher, not here, since price is attracted to liquidity, given that we're ranging. So yeah, it pretty much depends on the context. Okay, order blocks are less effective in a range. Price is more attractive to the liquidity extremes beyond the range limit. Exactly. Exactly. That's very much important to know. Recognizing the conditions in which price is, developing and what's happening, that's going to give you a better edge on how to position yourself. That's why I've been charting a lot of higher time frame charts instead of focusing on the mid time frames, which for me are the 30-minute and the 1 hour, since I believe that you gain the most, not the most confluence, but the most logical places for price to travel to from these kind of time frames. And if you are a great executor on lower time frames, it adds tons of confluence and probability for your setups. So yeah, okay. Any questions? Any other thing that you guys want to see? This, what do you want to see? You should hop in and do some charts as well.
Yeah, man, I can do that.
Okay, okay, okay. Let's get up. I'm gonna get some water and I'll be back. Okay. What should I do right now? Should I stop streaming or how is it? Oh, and by the way, we're close to 2,600 followers. If any, I mean, we only need 2 guys for 2,600. So let's go.
Nice, man.
Nice, nice. Let's get it. What should I do? Should I pause the stream? How do I do it? I'm not that agile here. Let's see.
I think like for a while Follis can continue, then we can do some back tests. It's already pretty late actually, and you were like you really wanted to teach something and we didn't want to stop you. And I think it was really good to show that how you are what's your perspective on the charts, how do you trade, like for a swing trader you were, what I'm saying, you were aiming the demand and supply, swing in between them. It's pretty clear, bro, and thank you for your time.
Thanks for having me. I hope everyone. So let's go, Follis. I'm gonna be hopping out of the stream here right now. Okay. I'm gonna go get some water. Okay. Am I still talking though? Yeah, I'm still talking. Okay.
Just
Okay.
don't go to the bathroom or anything like that. Yeah, I'm happy to jump in. I'm not going to be too long. I'm just maybe going to run over 1 or 2 charts and just kind of show my setup and how I look at things, what I look for when I look at a chart. I'm just going to look at maybe BTC, ETH BTC, and BTCD. Yeah, I'll be really quick. And again, if anyone has any questions, please fire into the chat. I'm also just going to say, well done, MGV. That guy is just so smart and so knowledgeable. He really knows his stuff. Yeah, he really knows his stuff. So yeah, give him a follow on Twitter if you're not already. For some reason, the guy he gives out so much alpha, man.
Something that I mean that I would love to see from you, Follis, is how do you think that we could have prevented this? I mean, how could we have and position ourselves correctly before the dump? So the warning signs that we were talking earlier, how to spot them. I mean, from my swing trader perspective, there were some obvious signs in the 1 hour, but since you also trade lower time frames, I would like to see that perspective from you.
Yeah, sure. Well, I'll check it out. So, Ryan Beck, I'm gonna share my screen now.
Okay, bro.
Yeah. I don't know. Can people see that?
Okay, I'm also sharing the screen, so we will not stack the limit.
Nice. Okay. So yeah, like this is just my BTC chart. This is just kind of how I set up things, what I look for. Like I think my style is pretty similar to MGV. I'm a price action trader. So I let price tell me what to do, what to look for. I don't really use indicators. I have in the past, but typically price is the full story. Price tells you everything you need to know. Now there are obviously narratives and things like that, and there are there are other I guess market news and things like that, fundamentals you need to be aware of, but everything is shown in the charts. So I'll very quickly run through like how I mark up my charts, like what I look for. I'm mostly I guess I'm a intraday or low kind of like low hourly trader. Like I don't really trade the M1, M2, M3. Lowest I go is probably M5 or M15. And the highest I go usually is H2, H3, H4. Like, I don't know. Yeah, exactly, MGV, mid-time frame trader. I don't know, do I look at the daily or the weekly too much? Maybe just to give me a broader idea of the narrative. But typically, I'm down in the hourly. That's where I feel comfortable. That's where I think I have a bit of an edge. So yeah, like MGV, I like to, when I look at a chart, like the most important things for me are levels and order blocks, like looking for where price has reacted strongly in the past and where it's likely to react strongly again. Also very important, like I'm sure everyone here is aware of, liquidity. Also something to be kind of aware of, like where is the liquidity in the market? Where is price going to be drawn to? And then market structure as well. Like you cannot trade without understanding market structure, or you cannot trade price action. So you got to be aware. I mean, obviously we're in a big downtrend for several weeks now, more like several months. So on a high time frame, you're favoring the downside. I think it gives more conviction to shorting. And you need to have extra reasons, extra confluence if you're looking for longs. So yeah, as I said, I like trading the hourly. H1, H2, H3 is where I'm most comfortable. And I like ranging environments. I know a lot of traders far prefer strong trends, but I actually think as a PA trader, and if you're trading off order blocks, ranges can be, yeah, MGV says it there. Ranges can be really, really fun to trade and very predictable. Sometimes they give really clean PA. So actually, in Bitcoin, I know a lot of people are complaining about the price action for the last few months because we've had these big drops. But actually, apart from those drops, I mean, there's a lot of sideways crab action. People give out about it, say it's hard to trade. I don't know. I think it's beautiful. I think it's very clean. I think when price is going side to side like this, it's easy to trade because you just establish ranges. So like if I'm looking at a range like this, let's say H2, like price comes down here, you establish a range. So if you're looking at a range, something like this, obviously this isn't going to be here when you draw this range. You're looking for liquidity extremes. You're looking for price to go from range high to range bottom. You're looking to get bullish at the range low, bearish at the range high, and be careful when price is in the middle, because when price is in the middle of a range, order blocks and things like that don't necessarily work as well as you want them to. Price will be attracted to the liquidity at the end, at the extremes of the range. So yeah, like at the current range here, I'll just show you my markup. Like I've marked out these order blocks. You see here, I think it's a H4 order block. Price reacted pretty well from it. There was a liquidity sweep here. Price reacted really well from it. This wasn't a short I took, but it's a very tradable short. We've breaks in market structure here. Price kind of got a little bit bullish here, but on most of the time frames I was looking at, started to get bearish around here. We had a market structure break here, and that was confirmed when this low was taken over here. You see I also mark out areas where there is resting liquidity above and below. So for instance here, I think there's a lot of resting liquidity under these two lows. And that's why I wouldn't be very comfortable longing this just yet, because equal lows love to get taken. And I know sometimes they don't. That's the risk you got to wait for. But for me, a safer long here, and the one I was actually waiting for, was a sweep of this long into an order block around here. And actually, to echo something that MGV said, mark out this order block just as he was talking, but it's also something that I would be hesitant to trade because of the equal lows underneath it to the left that look likely to get swept, actually, if I'm honest. I mean, if price comes down here, I don't know, is this order block something that I would be trading from? It feels more likely to me that price would come through and go into this. I think it's a M30 OB. Let me just check. Yeah, there's a M30 OB here that hasn't really been tested. There was a wick here that came back in, maybe took some orders, but for me, that is still a valid OB because the EQ hasn't been touched. That is barely a touch, and it came so soon after that. I think there's probably still orders here if we believe in kind of the narrative of that OB working. Something else I'll touch on. I have them marked here. I don't normally mark them so obviously, but I thought I would for the purposes of this chart. Our Fibonacci levels. I know Reinbeck likes Fibonacci levels. I know MGV says he's not really a fan, but it's something I like to mark out. And actually in BTC recently, they worked really, really nicely. So if you imagine this is the level I'm marking here. Sorry, my chart's getting a bit busy now, so please tell me if you can understand the point I'm trying to make here. But if you take the extreme or the origin of this down move, and you take that as the other extreme, and you mark out those fib levels. I don't know who here is familiar with ICT concepts, or sorry, the optimal trade entry, the OTE concept by ICT. But he basically just says that, you know, these levels marked on the fib, the 0.5, the 0.62, the 0.65, the 0.71, and the 0.79 are important ones for entries, and particularly the 0.62 to the 0.65. It's called the golden pocket. Some people call it that. It's not something I would trade off on its own, but definitely something that can add confidence to your trades. And actually, I had this marked out, and you see that Bitcoin, after this big dump, came right up and right into that level. And then the next fib, which was taking that extreme and bringing it down to this price. Sorry, taking this price extreme, let's say this leg up to here, you actually see on the retrace that it went straight to that level as well, and we got a really good reaction. So yeah, something that can be really easily implemented into your trading styles is just pulling fib levels and looking for additional confluence on your trades, additional levels to pull from. That's basically it. That's the whistle stop tour of how I kind of mark up an hourly chart. I know Reinbeck's not a big fan of BTC price action recently, but it's not been too bad for me. I think it's actually it's okay to trade. And a lot of the times, something we mentioned on the call just before we started was if price action on BTC isn't clean, or you're almost seeing a setup but it's not quite there, check ETH, because there's so much correlation between those two. And a lot of times when a setup isn't quite there on one, it'll be there on the other. So if you're a price action trader and you're looking for setups, try and check both of them, because they do work in tandem, but sometimes one is a bit cleaner than the other. So does anyone have any questions on that so far? Sorry, I know I'm kind of flying through this, but I'm conscious of the fact that it's pretty late in a lot of places, and I don't want to keep anyone up past their bedtime. You know, we all get very cranky when we don't get enough sleep. I know I do. I see some questions coming in, so I'll give you guys a few moments. Yeah, something else I can look at just while we're waiting for those questions to come in is ETH BTC. It's a chart that I like to look at a lot of time because it can tell you a lot about the market and where you should be focusing on in terms of your trades. So I actually trade BTC and ETH, I would say not exclusively, but predominantly. I would say over 50% of all of my crypto trades are BTC or ETH. I just think it's easier to trade them. A lot of the times when I'm trading an altcoin, it feels like I'm trading a derivative asset because they're so reliant on the price of BTC that sometimes it's hard to get a clean read for me. I know some people will be very different opinions on that. But if you're trading BTC or ETH, you want to be aware that one of the two of them will give you better returns for shorts, and one of the two of them will give you better returns for longs over a certain time period. And the ETH BTC chart is absolutely invaluable for figuring out which you should be trading, and rather which you should be longing, which you should be shorting. So, I mean, it's like any other asset. You can chart it, and the price action principles apply to it. Order blocks apply, ranges apply. So here, for instance, we actually see a couple of weeks ago, I made a comment on one of our discords that ETH was at range highs. So if you were looking to short the market, ETH would give you better beta. It would give you better return than BTC, probably because of the fact that it was at range highs and it was probably due to come down a little bit. So I mean, you can short. I mean, the market has moved down quite a lot since that. What's that? The 10th of December. The market has come down. Short basically anything, and you would get decent returns. I mean, I'm sure there were many altcoins that gave you massive returns, but if you shorted BTC rather than shorting ETH, you would have gotten a little bit less return because ETH is the thing that has come down a bit more since then. And again, we can ascertain this because ETH was at the range high. ETH BTC was at range high, so it reacts like it's like any other asset. So I see there's a question there from Lithium. How do I get a directional bias
MGV.
while the market is completely crabbing? Yeah, it's a good question. I guess the time frames I trade, like hourly, H2, H3, like even M15, they kind of lend themselves to not having like too much of a directional bias set in stone. Like obviously, like here, for example, if you mark out, like I think I have like this was the range that I drew when BTC came down, when it kind of came down here after this big dump. Let me make that a little bit clearer for you.
I have the similar range. I exactly draw the same way. And
Oh, nice, man.
yeah.
Yeah, I don't know why that's because that. So yeah, I mean, I had this range drawn out. For me, it was just a matter of when price was at the range low, my bias was bullish, and when price was at the range high, my bias was bearish. That's essentially how I got my directional bias. Now, obviously, if you zoom out, like if you look at the daily for Bitcoin, like no one's going to say, looking at that you should have a bullish bias because it's just fucking down only since 8th of November. And if you zoom out again to the monthly, it'll be the opposite. No, everyone's going to say, well, you should have a bullish bias because it's up only for for Bitcoin's 10-year history. But I guess just in the time frame that I'm trading, when crab markets, when the crab is in full force and it's just going sideways like this, just play it simple. Like I'm bullish at the bottom of the range, bearish at the top of the range. I have a slight edge for being bearish or slightly more conviction because of the higher time frame bias. But in general, I think this is easy to play because you have good long opportunities at the bottom of the range with easy invalidation. So you have a good place to put your stops. And then at the range highs, you have easy shorts with also easy invalidations. Like here, for instance, I don't know, does anyone follow Trader George on Twitter? But yeah, I saw on his stream, he actually had this setup exactly, and it was perfect. But that's a good example of, getting bearish at the range high, and it turned out to be quite a good trade. So I hope that answers your question, Lithium. Yeah, it can definitely be hard to figure out directional bias when price isn't trending hard. But to be honest, I think it just depends on the time frame and particularly the type of trading that I do. Just take it level by level. That's something that MGV likes to say. Take it level by level, and I think it's it's very applicable here. Just play what you see in front of you, and keep in mind that the higher time frame directional bias as well. Are MSBs important when price is moving in a range? Yes, they are. I mean, again, it comes down to you're trying to figure out which you're trying to form a bias. You're trying to figure out which direction is price headed. And yeah, if you get a market structure break, like for instance, let me look at DOT very quickly. Yeah, this was something I posted on Twitter earlier, by the way. I think this is quite interesting. As I said in the chat, we had a FFG fill and a strong reaction from the H12OB, and a similar thing this side. Not something I would necessarily trade exclusively, but you know, it's nice, maybe nice confluence if you're looking for something anyway. Like here, for example, we have a kind of a range in play on DOT. Yeah, I guess you were here, but then here was clearly a market structure break. Okay, I mean, it doesn't really matter which low you use. You can use that one. I'm sure if you zoomed out on a higher time frame, there would be a swing low around here. We had this market structure break where candle closed below. So this is kind of giving you an indication that maybe price is about to reverse. Maybe the market wants to go lower. And actually, if you marked out, like I'm sure, let me just see. Yeah, I mean, if you're looking for an order block here, something like that actually wicked pretty perfectly into that. It's the wrong color. Can't trade off that. Or like maybe even something like up here. You know, there would be something to trade off here. You see a market structure break, price comes back, taps, and you know, you get this crazy big move. So yeah, I guess to answer your question, market structure breaks are important. Again, it depends on the time frame that you're using. You know, but fundamentally, try and be bullish at the range low, bearish at the range high, and wait. Like so, for here for instance, you're at the range high, you see an MSB, a market structure break. That's your indication that maybe now you're going to get short. And you see here, you have a valid order block to trade from. You've easy validation, and you catch this. You know, that's a massive move. That's a 12% movement. That's you kill it. I hope that answers your question, man. See. Yeah, man. Market structure breaks are it's something I don't even implement enough. Like structure is king. Structure even supersedes order flow, in my opinion. You know, try and get multi-time frame confirmation as to breaks in structure. It's a really powerful tool to use in your trading, and something that can really add confluence to your trades, or it can give you conviction in directional bias. Like it might seem. I mean, if you're coming off a huge move like this from the lows, a better time frame. You know, you're looking at a move like this from the lows, and it looks super scary. But actually, if you zoom in and find, you know, an actual reason to get short, you can capture these big moves and you can get great entries. So I hope that answers your question, Mark. MGV says, yeah, close above the EQ, close below the EQ. Yeah, exactly. As we said, trading a range can be really nice. It can be very clean price action. I actually don't understand why so many people are against the full force crab on Twitter. I think actually, I don't know, my impression, and I'm sure MGV would agree with me, is that a lot of the bigger accounts on Twitter, they're not actually great traders. They were born in a bull market and they made all their money that way. And once things actually stop trending, they have trouble making money. But it's not exactly a hot take. So yeah. Cool. So yeah, just one last one I wanted to look at was BTC dominance. Just because similar to ETH BTC, it's a similar idea. We'll actually look at the daily on this one. This is a similar idea. Like for I'm sure many of you have seen the chart online when BTC dominance is rising, and BTC price is rising, alts will they'll go up a small amount when BTCD is rising and BTC itself is dropping in price. Alts fucking die. So BTCD is an important chart to look at when deciding what you should be longing, shorting. Should it be BTC or alts? And again, like price action functions on this one as well. You can draw order blocks; they're valid. You can draw ranges. There's a range here. So, for instance, like BTC dominance, it came down. It kind of formed this range. This is going back to May last year. So, I mean, it's like 9 months old. Well, nearly 9 months old. But right now, it's kind of been at the bottom of the range for quite a while. So, I mean, if it drops further, I just have these levels marked. Like, alts will have a field day here. Yeah, like there are some levels over here that if we sweep, I feel like alts will absolutely pump. But, and I mean, there's an argument to be made that we're breaking down from this range now. But for me, this is still range low, and I would expect BTCD to rise a little bit. So, I mean, if BTC kind of huked a little bit here, or, as I said, I'm not long, by the way, but I would be longs for me. Sorry. Longs for me are more below this level. Like I'm looking for longs maybe here if we get a sweep. I don't want to trade this order block. But yeah, as I said, I think because of the way the BTCD chart looks, BTC could actually be the higher beta play over the next few weeks, few months, because of the fact that I expect it to go up at least maybe to the mid range. So it's just something to be aware of. Now, of course, we could completely break down, in which case I think alts have an absolute field day as long as BTC doesn't completely shit the bed. But yeah, just something to look at. BTCD, important chart, and ETH BTC, also an important chart. Just to make sure that you're not backing the wrong horse, because I mean the market is so correlated that when things pump, everything pumps. You just don't want to be holding you just don't want to be looking at the thing that's pumping the least, if that makes any sense. So yeah. By the way, I just noticed the EQ lows you marked. Yeah, that's an interesting question, Diavol, about sweeps happening on some pair or on some exchanges, on some charts, but not happening on others. There's an argument. Oh, I see MGV actually kind of answered your question, but yeah, basically it's there are two arguments. You either look at the chart of the exchange that you're using, or you look at the chart of the exchange that has the most liquidity, the most volume. To be honest, I just do the one that I'm trading. I know that leaves me in the dark sometimes. If there's a really tight sweep that doesn't get swept on my exchange, let's say, but it gets swept on someone else's, then they have a different bias. They have different ideas to me. They have different predictions for where price might go. But yeah, that's just the risk you take. I mean, there's probably no harm in having multiple charts and referencing them. But in general, yeah, I just chart the exchange that I'm trading off. Because otherwise, you're kind of, especially on BTC, like some of your orders might be off like $10 or $15, and not really that fun. I don't know. I don't like that inaccuracy wrecks my head. So yeah. Does anyone else have any questions? Like I'm aware we're going to do a little bit of back testing now, so I don't want to hog too much of the limelight. And like that's all I wanted to look at really, just like my style of trading, like how I mark up a chart, what I look for. Like my style is very simple. And sorry, actually, I will just look at one last thing that I like looking at is volume. So I'm not necessarily a volume trader, but I do like using volume profile from time to time. I actually have it on my main chart there, but this is the chart that I prefer using. It's just like a volume specific chart, and this can be great for figuring out where price is likely to react from. I don't know how many people here are familiar with volume profiling. This is just a standard volume profile on TradingView, but it essentially gives you a profile of the volume that has been traded in a given time period. So here we have session volume profile, which is basically just the volume profile over a period of candles. It's daily, so it's 6 4-hour candles. And then on the side here, this is just a visible range. It just gives you all of the volume traded for the candles that are on your screen at that moment. So what I will just highlight here is that volume can be very, I suppose, revealing in how price is likely to act and how price is likely to react at certain levels. So typically what happens is, it's the same principle as a fair value gap. Price is attracted to areas of low volume, and typically it will reject or range within prices of high volume. So here we have basically called a low volume node or volume valley here, and it correlates with the fair value gap on my other chart, on my price action chart. Basically, price, obviously in an ideal world, price would be attracted to this. Now, it's not always going to be the case, but this will act as a draw because, well, inefficiencies in the market are usually filled. That's one of the principles of price action. Here we have high volume nodes. The idea is that price will probably reject from these, or if price accepts within them, it'll probably range within them. It'll be harder for price to get out of those areas. They're kind of locked in these high volume areas, and it's harder for them to get out. Typically, you want to trade the edges of these high volume nodes. They offer the best confluence if you're looking for areas, levels to mark out on your chart for where price might react. They're pretty good. Well, just high volume nodes, areas where price is likely to react. Then the last thing I'll point out is these white lines on the chart are points of control. They're specifically naked points of control. So each line on the chart, each line in these volume profile clusters as a point of control just shows where the most volume was traded in that particular session, in that particular day. And a naked point of control is a point of control that hasn't been revisited by price since price left that area. And they just act as price draws. They act as magnets. So usually you get these taken in a ranging environment. Typically they get taken very quickly. But when you have a drop like this, or if price is if price is trending, you get these points of control that are left, and they'll also act as a draw on price. So these ones are quite far away, but in some charts you get them quite close by, and they can act as a good level to mark on your chart as somewhere that price might be attracted to. So yeah, I like trading volume. They're probably the only indicators that I use. Like I have volume on the bottom of the chart as well, also something to be aware of as a price action trader, I think. But yeah, basically the only what I would call indicators that I use. So that's essentially it, guys. I'm gonna maybe if anyone has any questions, fire ahead before we do the live back testing. I think that's about it from me for the moment.
Oh, thank you so much, Follis.
No worries, man. I want to say big love to all my Turkish brothers. Got mad respect for you guys.
Do you remember how to say thank you?
How to say thank you?
Yeah.
No, but I'm sure Google Translate will tell me. No, I don't. How do I say it? Akris, man, you think I can pronounce that? I think you're overestimating my skills.
I think you can handle it from your island accent. Will be nice. Yeah, will be nice to hear it.
Let me just do one thing.
Yeah, it's already there, like the deck language to Turkish, like first one.
Teşekkürler.
Yeah, good one.
Was that good? I'm not gonna lie. I cheated. I typed it into Google Translate and clicked the.
Actually, you are showing that now.
I have. So funny. Yeah, you know what, guys? I'm glad you saw that. Well, there you go. Yeah. So so yeah. Hey, thanks, guys. Thanks for having me. This was a lot of fun, and yeah, let's do some back testing maybe.
So how you guys wants to do that? Should we open the same chart and start together?
Yeah. Why don't you take the lead, Ryanbeck? I'll
should I do it? Really?
Yeah. That makes the most sense. So if I
am the one always doing that here, so they're mostly wondering you're still, especially MGV. But I think is he here? Yeah, he's here.
I'm here.
Maybe we can do together. I will also open my chart, and
run it?
Yeah, we can start together on Summers. I don't know which pair we should work on it.
I mean, whatever you guys want. By the way, we're just hitting hourly supply on BTC, so be mindful of that.
Okay.
The backtest trade hit the full target. Of course, those are the ones you don't take. But yeah, glad to know it went well. I mean, it could be interesting to show that example.
Yeah, I agree. MGV.
Yeah, it could be nice. Okay. So let me share my screen.
Yeah. Just to check, is my screen no longer sharing? Yeah.
No, don't worry.
Perfect. Okay, great.
See my screen? Can you guys watch it?
It's filled supply and rejected.
You guys, I mean, wait. Yeah, I think. Can you guys see it?
Yeah.
Yeah, I can do that.
Okay. So okay, let me erase this. We're looking at BTC on the hourly. So something that was really important once we allayed off demand. Okay, I disregard them. Once they're tested, they're not that attractive to me, so I just cut the rectangle or have it kind of away. So in this case, price dipped, moved away. We didn't get to tap the hourly supply, so we just left a high in there, which is gonna be revisited sooner or later. And then we broke structure once again. Once we broke below this low, which was the one that gave us the highest high. Moving forward to that, you start looking for shorts once you get into this level. And basically what happened was rejection after rejection from the trend line. And okay, so this is the trade that we were looking into. I keep getting like a bloop, bloop, bloop sound, which I don't know why is it happening. I don't know where does it come from. Well, okay. So what do we have in here? We have this low from the demand order block, which obviously became pretty obvious liquidity target once we shifted structure. And what I was looking into is the reaction from price once we got to sweep it. So you have this hourly low, and then you look into lower time frames to look for confirmation, so you can long for the aim into the higher targets. Which in this case, I would look the immediate supply after we got the hourly market structure break. In this case, 42,500s. So the hourly low is sitting at 41,270 bucks, and we go to lower time frames. Okay, I'm going to erase this from 0. One second. Okay, so we go all the way back all the way down to the 5 minutes. This is the 5-minute chart, and this is the high time frame low that we pointed out in the early chart. So do it like this. I think it will be better. Okay, let me put BTC in the hourly here. I'm gonna remove these drawings. Okay. So this is the swing low that we were looking for. It's our main target. And once price got actually close to it, we move into lower time frames to find an entry and refine and actually define how can we position ourselves aiming for lower targets. Remember, this is a 1-hour time frame in our right, and on the left we have the 5-minute time frame. So after the market structure break, which was breaking from here, the low that gave us the highest high, we are now aiming for the immediate supply, which was this. This is the FTX chart, so it looks a bit different than the one we charted. That looks a bit different. Supply is a bit small. It's a bit it's smaller in this one. So you look for that one. you have the low right here, and then you go to lower time frames. This is the 5 minute. As we can see, price was doing was this. Let's replay it. Okay, why isn't it coming back by replay? Okay, so price is approaching the high time frame low. Monitor this actively. So let's see what happens. Price puts lows just above the 1 hour swing low. This one right here, black. Those are some cool lows. Okay. Now we want to see those lows swept, which would almost, I mean, it's kind of obvious that would give us the sweep of the hourly low as well. So let's see. There's our swept. There it is. Now we wait for price to give us confirmation above this swing high. So what we're expecting at this point is price go after this swing high, either with a wick or with a close, and then coming back, and we would bid the candle that rate the lows. And which candle rate the lows? This one. But you are not gonna bid it until you get confirmation, and your confirmation it's going to be a wick above this one right here or a close above the wick. So be mindful of that. You don't place your bids until you get your confirmation. And in this case, this is your rate candle. Put it in the middle. There you go. Oh, let's see what price did. Okay, there you got your wick that takes out the high. Be considered as a confirmation if you're an aggressive entry type of trader. For example, that's what Josh does. He considers this as a market structure break, so it's pretty aggressive. But since you're trading lower time frames, as I said before, I think you have to approach the market from a liquidity perspective instead of being so specific about getting closes and market structure breaks that go purely with the definition of it. So you just take a look at the wick, it swept the high. So okay, price took the liquidity above, took the liquidity above to the liquidity below, and now we should get a reaction from the red candle. And why are you positioning yourself long this point, since you are not getting like a higher time frame confirmation too long, which would be a market structure break? I mean, it's been pretty aggressive. The movement was very suppressed by the trend line, and I think I was thinking that price, after visiting that point of liquidity, this low right here, that would create a reaction. So that's why you monitor this. You aren't actually monitoring the wicks just because they do, or just because, but you need to see what's happening once price moves to that wick. So in this case, what this is telling us is that price wants to move higher, and we already took like a high time frame liquidity point, so we should be moving up. It's not the same to be taking this wick as to take this wick. So this is a major low, and these are minor lows. These are 5 minute lows, and they really, for example, if you were trying to long this one, would have expected for a confirmation above this one right here, and many other cases, but price would have still be attracted high time frame low instead of your targets, and that's the kind of confluence you're looking for. So here you already place your bet, you already place your bids, and we put our long position here. This would be our entry. You want the low below the candle that rated. Since you are basically trading against the trend, you want to get out quickly, and you would be aiming for this is supply as well. So let's take this one, as this one was already tested. This one will be your target as well. This supply right here, which, as we said before, it's a small candle, and look how it preceded 3 candles that had large bodies. That's the kind of impulse you're looking for if you are marking out supply or demand order blocks. It's the same premise. So now let's see what happens. Okay, move forward. Price confirms. This is a better confirmation actually. Price closing above the swing high that swept the low. Now you feel a bit more confident regarding your setup. Price action is always gonna look the ugliest when you're bidding. So yeah, I mean that's why I don't like to trade lower time frames. Basically because you will know rather faster than slowly whether you're right or not. So it really shakes you out quickly. It doesn't give an F about what you're doing. So you can see you are already your target. The target is 42,568. 42,568. Oh. Okay, so this is a 5.3R trade. Okay. Pretty big impulse. And there you go. Target. Full target hit, which was the hourly supply that we have right here. Mark it out. This is where price is sitting right now. As you can see, price already rejected from it. And what we're looking for now is to do the opposite as we did right here, but looking to position ourselves short. And how would that be? Let's see what price has given us so far. Okay, this is what we would be looking for at this moment. No longer replay mode. Okay, so we put a high. We don't have an obvious liquidity point coming into this order block. Let's see what we have. We do have this one. We SFP'd it, but then, well, we did SFP this one as well. We did. This is kind of worrisome. So let's see. 42, 40, 32. Let me get it right here. Okay. Okay. For me, this is an obvious liquidity point as well. Here's the one we swept. And yeah, that's for now. Otherwise, we will be looking for this one almost at 43. Let's see. Okay, let's go. 5 minutes. Okay. Now, okay, you took this high, which was a high time frame high. Now, we're looking for the same reaction you did before. You took it here. This is the wick that took it, but this is the swing that preceded the swept. So that wouldn't be that much productive. Just a sec right here. Okay, never mind. So this isn't, actionable at all. In this case, you put a second high, which isn't that attractive. It's just, small high. Isn't that obvious of a liquidity point? But this one actually gives you, the chance to position yourself, aiming for lower prices. So you put in a high. This is the low that swept it, that preceded it. So what would your confirmation be? Price breaking below the swing that preceded the liquidity swept. So basically, if we wanted to short this, we would expect for something like this, and then we would bid the candle that swept the high, which is this one. Okay, this one right here. This would be the one. So this one is a really valid setup since you are sitting at a side of an hourly supply order block. That's the most important thing. You always have to add confluence to your ideas, and you can see a lot of imbalance here in this candle. So you could be aiming to at least 31800s. Yeah, that would be an approximate target. And yeah, I mean, as well, you have an SR flip right here around 41800, which is the same. It adds you confluence. It isn't that much of an attractive setup since you are going to be placing your stop above this high and aiming for this level right here, but it gives you above 2R, so which is pretty good. I mean, it's valid. And you're going with the hourly trend, the hourly structure, which also gives you confluence. And yeah, I mean, this is a valid trade if any one of you wants to take it. And from here, this microstructure, You can also deduct that price broke the structure to the downside, since this low be the highest high, or the equal high. We can match these ones with the other one, with this one right here. So we could put a stop here and we could maximize our R, because if price is going back to this place, you already know that you're wrong, unless price, it's just a stop hunt. But above here, it's already a very cautious stop, more than valid. And yeah, I mean, there's resistance, kind of support, support. It's also an SR flip here. So yeah, it's pretty valid. I think it's valid. And you should, I mean, the only thing that you need to do is to wait for your confirmation, either a wick or a close below this swing low. So once you get it, you ask your rate candle and you aim for lower. That would be the setup. And it's just the same as we did here, but the opposite case. Any questions regarding this execution and this technique? Let's see. Yeah, I know. That's what the sound was like. People joining and leaving. He wishes. No, I'm from Venezuela, guys. I mean, a lot of you are Turkish, and you guys know where Venezuela is. So yeah, been asked that question a lot. Hmm, okay. The rate candle, is it ICT's concept? No, it's actually a concept that I learned from SMFX. If you listen to his streams and his YouTube channel, he talks a lot about this, and it's his go-to strategy. He always uses the same premise. You have a major high, then a low. You take the swing that swept the low, and then you wait for confirmation of it, and you bid it. And in case you're trading, reversals, or you're expecting to catch a knife, what he says is to wait for two confirmations in a row. That's what we meant. That's what we mean when we talk about two Quasimodos followed after the other. So yeah, rate means one candle goes lower, high, the previous candle is closing. Yeah, I mean, not exactly. That would mean an SFP. The rate candle is just the candle that swept the low. In this case, you can see it. This is the candle that took it. One sec. This is the candle that took it. This white one that looks like a hammer. And it's the one that swept the equal lows in the 5-minute and the high time frame low. So you got your confirmation and then you bid it. You could have also bid this ceiling right here, the SR flip, but I prefer bidding the rate candles since it gives me a better R. In this case, since you're trading counter trend, you are looking for that. You're not looking, it doesn't make any sense to risk 1%, 1.5, 2%, whatever your risk is per trade, 0.5% on a counter trend move with low R. So I place a lot of emphasis on that, maximizing the R of my trades and diminishing the amount of risk that I take. That's the key to being profitable. Okay. So really nice setup to know use. Yeah, I mean, not only as a setup, but it gives you a lot of confluence and probability. And it's a probability enhancer whenever you're looking to enter on demand order blocks or high time frame supply order blocks as well. Is you don't want to be playing. You could have set bids at the demand order block, but if price doesn't follow through, then it's pretty obvious that you're gonna get stopped out. You just want to make sure low time frame structure shifts to your favor before entering, and that's the basic premise of this. SMFX, there it is. Okay. So any questions regarding this, the entry techniques? I'm actually gonna be eyeing this setup, guys. So if I take it, I'm gonna post it on Twitter. I'm actually gonna share it right now. Tag SMFX. Let's see if he gives me a shout out or something like that. But yeah, I mean, it's pretty much what he uses, and it's pretty valid. He's actually selling this strategy, an indicator. It's not automated, but you get it for trading view, and you can set alerts on it. It's not fully automated, but at least it will give you signals. It's very pricey, but if one of you is into that, you go take a look into him. So yeah. Any questions regarding this or anything else?
Will we do some backtesting?
Okay. I'm sorry. What was that? I was plugging my headphones out.
Will we do some backtesting? Some live backtesting?
This concept, this backtest set up earlier, and well, we saw it play out throughout the stream. So really nice. That one was live backtesting. This one indeed.
I see BTC closed with quite a nasty SFP on the M90.
Let's see. Well, actually, let's see how the 12-hour closed. This is what I'm eyeing in the H12. We see this wedge information. If I'm honest, I actually think it's gonna scam us and break to the downside, and then running the stops, and then we can get some serious upside. But in case it goes to the upside, I'm gonna fade it at 45K. That's my plan. It's always been so yeah. But it was a nice close. It didn't actually hold the. Well, it did. Yeah, it did. It did hold the 41,800 level. So that's bullish. Okay. Can you guys listen to me now? I think this is. Hello.
Yeah,
we
we
can
are
hear you.
hearing you.
No, I mean it's because the AirPods they go funny. So I don't know if they discharge or anything of that kind.
You need
Are
to
you
get the
guys
real
okay?
AirPods, not the cheap ones from China.
Not from China. Are you guys chasing the position if you can't enter with your limit order? I mean, since this is low time frame trading, I wouldn't advise to enter with market orders. I mean, it depends on the size you're trading, but trading BTC with market orders can be hurtful since you are looking, to trade with size, and I don't like paying that much money in fees. So I mean, I would prefer to stay with limit orders. I have spent a huge amount of money on trading fees, and I really hate them. So mostly on FTX, they tend to front run your orders all the time.
Yeah, I agree. I think marketing in and out is something I used to do a lot more, maybe as a newer trader, but as I've gotten better and more confident in my setups, I think I almost always limit in, limit out now. Just
Exactly.
because as the style of PA, and I think you'll agree, MGV, the style of PA that we're using you're basically waiting for price to come to you rather than chasing the price. And I think it can get quite dangerous to chase the position. You lose ore. You can get caught on the wrong side of a trade if it reverses suddenly. So yeah, something you got to be really careful with, I think.
Yeah, exactly. And that's what Lithium is saying, that he just chased Aave with a market order because they front run him 3 times a day. Yeah, I feel you. I've been in that place. I mean, the solution for it is just to be patient, and that's it. And that's it. But it's gonna happen, and it's gonna keep happening. It's not gonna be the last time either. So that's what that's what you gotta be working on, just to make sure. I mean, most of the time, price won't revisit your bids or your asks because maybe you're asking for too much. So sometimes you have to be more flexible, selling for a lower R instead of going for that banger entry. Those are sniper bottoms and those are sniper tops. I mean, all of us love them, but not all of the time we can get it. So yeah, that's basically it. I think that can help you for future trades.
I think it's pretty late. What do you guys thinking about the backtesting? Should
Yeah,
we
I mean,
start?
if you guys want, we can do it another day, maybe tomorrow, maybe
Yeah, I
I don't
think
know, the
will
day
be
after
better.
tomorrow.
And another issue
Yeah.
is the timing, like it's
Yeah.
pretty late in Turkey. I think it's like
Mhm.
3 a.m. So the people are here is really, I don't know what to say. They really want to learn something.
Yeah,
The
no,
night
I
owls.
mean,
Yeah.
They're
the
really
ones that are
dedicated.
here are the real ones. Exactly, they're putting up the work.
Yeah.
Yeah.
I appreciate that for real.
Well, I'm happy to come back and do live backtesting another time. It's
Okay.
pretty late here as well, and I got work in the morning. So yeah, I'm happy, man. Thanks so much for having me on. I'm happy to come back.
Thank you guys for your
Yeah.
time. Thank you for
Thanks to you,
everything
thanks to
you
you.
guys shared.
No, thanks to you for having us. Any questions, feel free to hit me up. Don't hesitate, whether here in Discord or whatever you guys want on Twitter as well. Yeah, make sure don't leave those questions for yourself.